This deal analyzer is going to help you work out step by step if your investment property is profitable or should you avoid buying it because it could lose you money. We're going to work out what your property will rent for, what's the property going to be worth once the project is finished. It will give you a detailed breakdown of how much it costs to buy a property, how much money you can get back on the refinance, and most importantly, how much money you'll make and how much cash flow you'll make on a monthly basis. I use the same analyzer for the 1-bedroom properties I converted into 2 beds, the house I converted into 2 flats, and the mixed-use property I'm currently converting into 4 flats. The process is exactly the same. In this demo, I'll be analyzing 1-bedroom which can be turned into a 2-bedroom property, but you would then just apply the same principles for whatever project that you're looking at. You can download the deal analyzer from the description below so you can follow along with your own deal whilst I do the demo. So let's get started. I'll essentially be taking you through a demo deal and showing you all exactly how to analyze the deal and how to see, well, does this deal work? Does it make any money, or should we simply move on to the next deal? In this demonstration, I'm looking at a 1-bedroom apartment which will be converting into a 2-bedroom apartment and seeing, well, does the deal stack? This is the property I'm looking at, which is in Kennington. Again, I believe this is zone 2 London, so not central London, but just outside of central London. It is a 1-bedroom property. It is not a maisonette. A maisonette essentially means a flat which is on 2 floors. This is actually just on 1 floor. Let me just show you the location and the floor plans just to give you some sort of indication of where this is. This is actually right next to the Oval Cricket Ground. If you roughly know where that is, it's between Kennington Station and Vauxhall Station in London, so very close to central London. The floor plans are pretty good. It's a pretty good size. It's 58.8 square meters. The layouts are really good. The room sizes are really good. So it ticks all the boxes from that point of view now. And now, because it ticks all the boxes, we're now going to be doing the desktop analysis on this particular property. The first thing we need to do is open the deal analyzer. Now, when you open the deal analyzer, it will give you 2 options: enable macros or disable macros. You need to click enable macros because that is essentially how all the formulas are calculated. So click enable macros. Now, the first thing we arrive at is the valuation sheet, where we need to first calculate the value of what the property would be worth as a 2-bedroom property. So currently this is a 1-bedroom flat and we'll be turning this into a 2-bedroom flat. Now, if you were looking at houses, we need to calculate, well, if you purchase a 2-bedroom house, well, what is the value going to be as a 3-bedroom house? Let's start inputting these details. The first thing it says is, what is the Rightmove link? So you need to input the Rightmove link. So you go into Rightmove, you take the link, and you simply put the link in here. The next thing you need is the property address. So to get the property address, go into Rightmove and scroll down, and normally you'll see properties sold nearby. If you click properties sold nearby, click view more. But once you load onto this page, it will actually show you all the properties which were sold in the same building. So you have a flat 19, flat 1, flat 20. Now, we don't know the exact property address, but all we need to know is the building for the time being. So this is the building here, which is Gray's House, Vauxhall Street. Now, you sometimes can't copy this, so you just have to open this up. You have the address here, which you can simply copy. And once you've copied it, you can paste it in the box, and now you have the address. You don't know what flat number it is, but that doesn't really matter too much for the time being. The next thing you need is the property size. So again, in terms of property size, if I just go back onto the property itself, now to get the property size, you can simply click on the floor plans here, and down here it will show you all the property sizes. Now, it might be up there, it might be to the left, but somewhere on the floor plans it will tell you the property size. Now, I look at the size in terms of square meters, so I'm looking at, essentially, if I zoom in and make this slightly bigger, I look at everything in square meters. So I'm looking at this number here, which is 58.8. So I input 58.8. Now, the building type, what type of building is it? Is it an ex-council flat? Is it a private flat? Or is it a house? Now, if I show you the pictures, it's quite easy to identify that this is actually an ex-council building. And by the way, I mentioned the Oval Cricket Ground, which is actually just here. You can see some of the spikes. Now, this is actually, I believe, the lighting for the Oval Cricket Ground. So literally maybe like 10 seconds away. So very good location in terms of that. So this is an ex-council flat. And then we have the asking price. So the asking price is this here, which is £330,000. So I put this in, £330,000. Now, the next thing we need to do is, once we have all the information, we need to know, well, if we turn this property into a 2-bedroom property, how much can we rent this property out for? And similarly, if you're looking at a 2-bedroom house and you were turning this into a 3-bedroom house, well, how much could you rent that 3-bedroom house out for? We need to know what the rentals are, because that is how we will calculate, well, what is the cash flow for this particular property. So in order to get the rental, we first need to copy the postcode, because we need to know, well, which postcode are we looking at. And then we go back into Rightmove, and we go into Rightmove here, we input, and then we click to rent. We select this postcode only because ideally we want the properties to be, as close as possible. If we can't find any properties within this postcode, we can then increase the radius slightly and then slightly more. Ideally, we don't want to go any further than half a mile. Ideally, we want to stick within, either this postcode or most likely, within a quarter of a mile. But the maximum we want to be going here is half a mile. So we'll stick with this postcode only. We'll select 2-bedroom because, we're going to turn this property into a 2-bedroom property. We want to select flats and apartments because, well, this property is a flat. And then we can also click this button here which says include let agreed properties. What this will do, this will show you properties which have recently been let on the market. Now, this is very useful because if there are properties which have been let, then that gives us a good indication, well, properties are renting at that particular price. So then we click find properties. And as you can see, there's actually no properties in this exact postcode. Now, that isn't too surprising because that just means that within that particular building, something hasn't been rented out, and like there isn't something to rent within that building right now. That's not very uncommon at all. So you can simply click a quarter mile. Now, once you select a quarter mile, you see that there's a lot more properties on the market. And now all we have to do is, well, simply find the ones which are 2-bedroom properties, which are, ideally in a good standard, but any standard we can write down for the time being, and are ex-council. So if we open up the first one here, we can see that if you look in the floor plan, and even if you make this bigger, we can see that this is a 2-bedroom property. Now we need to know, well, is this private or ex-council? This picture suggests to me that it is ex-council. I'm just going to see if there's any more pictures of the outside, but I'm pretty sure this is ex-council. Yep, this is an ex-council building, so this property is fine. So what we need to do now is we need to move this onto the deal analyzer. So if I go back onto the analyzer, the first thing it says is, well, what is the rent for this comparable property? And the rent in this case is down here, which is 1550. So I can input this 1550. The condition looks pretty good. It doesn't seem, absolutely brand new. The kitchen seems a bit old, slightly off the hinges. The bathroom again does seem a bit old, but it doesn't seem in bad condition overall. So I will give this a 6 out of 10. The building type we've already established is ex-council flat. The proximity is 0.25 miles from the property. The reason we know that is because we've searched within half a mile of the property. Now, if you want to be exact, you can change it to this one here, which is, it tells you exactly how far it is from our property, the postcode, and it is 0.21 miles. So I'll change this to 0.21. In terms of the notes section and the link, here you just have to add the Rightmove link. And in terms of the notes, there's nothing particularly I want to add. It seems like a very, very standard property. There's nothing I need to make a note of. So again, you can just take this link and input this link here, and now you have the link for the property. So just a couple of things here, by the way, which is the only details you have to input are in the blue in the blue boxes. Everything which is gray, everything which is yellow as indicated by these colors, or even green, they're already calculated for you. They're formulas and they're already essentially worked out for you. The only thing which you have to input is anything which is in blue. Now, one more thing to explain here. The reason we have this column here which says include 1 equals yes. Once you put in all these properties, if you then say, well, I don't think this first one actually is a good comparable because, well, this one actually is, let's just say for argument's sake, this was private and everything else was ex-council, and you say, well, yeah, I don't think this one's a good comparable because, well, this is private and it's not ex-council, or maybe the rental on this one was something, ridiculous, like £7,000 and everything else was £1,500. So rather than deleting this, you can simply just select 0, and what will happen is it will essentially delete it from all of the averages. So it's just a quick way of essentially inputting or taking out properties which you don't think are accurate comparables, or are maybe outliers. So this is essentially what you have to do here. You can, if you have all the comparables, you just simply leave one, or maybe let's say you only found 4 comparables. What you would do is you would have 1, 1, 1, and 1, and in the last one maybe you select 0 because you couldn't find the 5th one. So only have 1 and 0. 1 indicates that it is included, and 0 indicates that, well, you want to omit that comparable. So we'll change this back to xCouncil flat. We'll get rid of this one. And now what we need to do is, now we need to find 4 more comparables for the rent. So if I go back onto this, and now let's open this one up here. Let's see if this is xCouncil. We can open up this one here. We can open this one. We can open this one, and let's just open one more in case one of these are not xCouncil. So we already, okay, so this is the next one we're looking at. Let's see if this is private or xCouncil, if there's any pictures of the outside. Yep, this is again an xCouncil property. So this is, let's input the details. So the rent is 1712, and I will just input this myself just to sort of speed up the process here. But again, you can simply go up, look, well, how far is it from the property? Is 0.22 miles, so I'll just put that in. And again, under notes, this one I'll write that the let has already been agreed. So I'll say let agreed. So yep, this is, this one's fine, xCouncil. This one, again, this is a bit different because, well, this is actually, I don't know if this is part of the cricket ground, but it seems to be just outside of the cricket ground. This doesn't really seem like a typical type of property. I'm not even sure if this is xCouncil. So yeah, this is actually a private property which has, well, a pretty amazing view to the oval cricket ground. That's interesting. Yeah, but this is not an xCouncil property, so we can get rid of this, and this wouldn't really make for a good good comparison anyway, purely because it has something which other properties typically do not, which is it has some sort of terrace which overlooks the cricket ground. So we can get rid of this one. Let's have a look at the next one. Again, I don't think this is a council property. This is most likely a private property, so we can get rid of this one. Now this one doesn't seem to have any pictures of the outside, so what we have to do is we have to scroll down and we have to look at the map. Now once you click open map, you get this here. Now you can zoom into the property, and the property I believe is this building here, and there's a couple of ways of doing this. You can either click this button which says satellite, and again, it's sort of hard to see exactly what this building is. The next thing you can do is you can take this person from the Google Earth map, and you can drop this person and make sure it is facing, this human thing is facing the building. Okay, so see, it's taking me inside a shop. Let's go outside the shop here. Let me just exit the shop and see what the building is above the shop. And again, I think this might just be private. Yeah, see, again, this is simply just private apartments above a shop. So we can't really use this as a comparison, but that is again a good way of identifying, well, is this a private building or is this an xCouncil building? So we can get rid of this one, and now we move on to the next. So I believe this is probably not council either. I believe this might be a private apartment. So we can get rid of this one, and now so we are still on essentially 2 because, well, this is private as well. So now we essentially just keep scrolling until we find some more. So as you can see, we've already done this one. This is the next council. I can see from the picture outside. Sometimes you can even just scroll through here and see which ones are xCouncil and which ones aren't. So you can see this is xCouncil. Again, if I just keep scrolling here, Again, really interesting, has a view to the cricket ground, and it's not ex-council anyway, so we can move on. This one doesn't have any pictures of the outside. Now we could simply just go into maps and have a look that way, but I'll just move on for the time being for the sake of this exercise. And this one is ex-council, so we can open this one up. And again, I believe this one might be ex-council as well. This does look like an ex-council property. But again, it's not exactly a good comparable because this one is above shops, whereas the one we have is not above shops. So we can leave this one. This one I believe is most likely private. It looks kind of like private just from those pictures alone. Let's have a look at this one here. Okay, so this is an ex-council property. So let's open this one up here. So we have this as an ex-council property. We have this one. We have, I believe, this one. Let me just confirm. Yep, this is ex-council. And finally, I believe this one was also ex-council. And I believe we have one more maybe. Yep, we also have this property here. So what I'm going to do now, we've essentially found 5 council properties that we need in the area. So I'm essentially going to take all of these details and put them into the deal analyzer. So essentially we have 5 properties, 5 rent comparables within the, within the area, within a quarter of a mile of our property. So I'll quickly just take these details now and put them into the deal analyzer. So essentially I've taken these 5 comparables and I've put the deals, I've put essentially the rent comparables into the deal analyzer system. So now what we have is we have 5 comparables. I've included all of them, and we have the rents, we have the conditions, we have the building type and how close they are to the property, and also the link. Now we can see that the average property is being rented for £1,559. The average condition is, well, around 5 out of 10. Now by the time we turn this property into a 2-bedroom property, this is going to be brand new, so essentially it's going to be 10 out of 10 condition, but currently the rent is about $1,559 for something which is on average about 5 out of 10. So I think we should be able to get anywhere between $1,650 to maybe even $1,700 for the fact that, well, we have a 2-bedroom property, but it's also brand new rather than something which is in very, very bad condition. So we'll put in $1,650. That seems about right, just as, just slightly more than what is currently on the market, but we have a property which is 10 out of 10, is brand new, so we should be able to charge a premium rent based on the fact that, well, it's a brand new property. So what we have now is we have the rent of the property, but now we need to know, well, if we turn this into a 2-bedroom property, what is that property worth? So this is where we need to start looking at the sold comparables. And so again, if we have a 1-bedroom property, we're turning into a 2-bedroom property, we need to know, well, what is that 2-bedroom property worth? And similarly, if you were looking at a 2-bedroom house, well, how much is a 3-bedroom house going to be worth? So again, we do a similar exercise, but using a different tool. So we go onto this and again, take the postcode. Now, once we've taken the postcode, we can close all of this. We don't need these anymore, but we do need a tool called mouse price. So now you go into mouse price, and the first thing we need to do is make an account with mouse price, and we need a pro account, which I believe might be about £10 a month or £15 a month. And once you go into your account, click visit mouse price pro, which you can see down here. And then under pro services, click comps search list. Now here you need to enter the postcode, click search, and when you do that, you get all the comparables of all the properties which have sold in this area, starting from the closest to things which are slightly further away. So as you can see, our property was in the building Grace House, and you see all these properties which are also in Grace House which have sold. But some of these properties sold recently, some sold a few years ago. Now, when we look at properties to convert, and when we're looking to add value and then refinance later on or even sell, how the properties are generally valued is by, you have a mortgage surveyor or, a risk surveyor, someone who's going to value the property. They want to look at properties which are similar, which have sold within the last 6 months and have sold within a half a mile radius. So that is essentially what we're going to be working with as well. But again, the closer you can get in terms of the proximity, the better. So what we'll do is under bedrooms, we'll select 2 bedrooms only because we're turning our property into a 2-bedroom. So we want to know, well, what are 2-bedroom properties worth? And that's already eliminated quite a few properties. Property type, we're looking at a flat. The date of sale, we want the last 6 months ideally. And if we can't find anything in the last 6 months, we can slightly branch out and increase to the last 1 year. But ideally, we want to be within the last 6 months because that's how mortgage companies, look at comparables. And the distance, again, similarly to Rightmove, we want to start as close as possible, and then we can, branch further and further out based on what we find. So we'll go within the supplied postcode. So again, very, very similar to before, within the supplied postcode, we find nothing. So we then increase to a 1/4 mile radius. Now, with a 1/4 mile radius, we essentially find one property. And what we need to do now is we need to say, well, is this a council property? Is this a private property? And does this make for a good comparable? So you can open this up in a new tab. And once you have this property, the first thing we need to know, well, is this private or is this ex-council? So what you can do is you can take this address here, you can take the full address, copy it, go into Google and paste this to Google. Now, there's a few ways of doing this. The first one is if you look at images, generally you can see, well, the type of building based on the images. Now, this is called Loughborough Street, Violet House, and it might be hard to see this is not exactly the same property because this is Bramham House. So again, there's no pictures. Okay, so we can leave this one. We can go to all. The next way of doing this is sometimes you have the Zoopla link as the first link when you input the property address. And if you click onto the Zoopla link and scroll all the way down, sometimes you have pictures of that particular property. Now in this case, there are no pictures available, so we found nothing on Google, we found nothing on Zoopla. The next thing we can do is go back into mouse price and scroll down onto the map. And so this is where the property is. We can zoom in on the map, so we know this is the property we're looking at here. But what we can do is we can click this button here which says bird's eye view or even aerial view. But if we click bird's eye, we can see, well, this is actually this building here. Now I can tell this is an ex-council building, but as you can see, this has 1, 2, 3, 4, 5, 6. It has 6 floors, and it might even have 7 floors. I think I've miscounted. If I zoom in, it might even have 7 floors. So I believe I can't see properly, but again, 1, 2, 3, 4, 5, 6. Yeah, I think it has 6 or 7 floors. Now, this doesn't make for a good comparable because the property we are looking at is 1, 2, 3, 4, 5 floors, and this is a high-rise building, or it's definitely bigger than the property we're looking at in terms of floors. So that doesn't make for a good comparable. So we can essentially leave this one for the time being because we're not going to use it. And we can then branch out and make this slightly bigger by going to half a mile radius. Now, when we look at half a mile, essentially we're doing the same thing, which is we're looking at, well, which of these make a good comparable. Now, we've already looked at this one, and this one is essentially a council, but it's a high-rise council, so this doesn't really work. We then go on to the next one. And once we open this one, again, we do the similar exercise. We take this and we put this onto Google. And again, under images, we can see that, again, we can't really tell too much. So we go back onto Zoopla. Look and see if there's any pictures. Oh, see, this one now does have pictures. And again, this is this type of property. So again, it's not exactly the same type of property. This might be ex-council, but it is most likely private. And so therefore we can eliminate this one because it is not a good comparable. So we can eliminate both of these. And then we simply just, move on to the next one, the next one, the next one. Now, what you might find is that you might essentially go through all of these and you might not find a lot of comparables. In that case, what you need to do is increase this from the last 6 months to the last 1 year. And again, we'll start the same way, which is first we'll look at within the supplied postcode. And again, within the postcode, there's nothing, so we go to a quarter of a mile. So last time, the only one we had in the quarter of a mile was this one here. But now we have, 2 more to potentially look at. So, and by the way, I didn't go through all of the properties just for the sake of this exercise, but essentially what you would do is within the last 6 months, you would first go through all of them and to see, well, can you actually get 5 comparables or not? And if you can't get 5 comparables, only then would you increase to the last 1 year. But just to speed up the exercise, I've increased this to the last 1 year. So now let's look at this property here. Again, I can take this, or again, I can simply scroll down, go on to maps and views, see that the property is here, do the bird's eye view. And again, so this is pretty much exactly the same type of building we're looking at. So we're looking at 1, 2, 3, 4, 5 floor building. And this is exactly the same, which is, look, it's got 1, 2, 3, 4, and 5 floors. So this makes for a good comparable. So we take this property, the first thing we need to know is, well, what was the price it was sold for? And if you go back here, you can see that the sold price is £400,000, and it was sold on November 19. So November 2019. So I take this here, 400,000. The date sold was November 2019. The building type is ex-council. Okay, so the next thing, if I go back here, the next thing we need to know is, well, what size was the property? And to work out the size of the property, sometimes it will tell you the size here, but what I find is that this is not always accurate. So what you can do is click this button here which says check EPC. I'll open this up, and you need the postcode of this exact building. So you copy the postcode, go to EPC, click accept terms, and you enter the postcode here, click search reports, and the one we were looking at was flat 12. So we find flat 12, which is here. Click show reports, and then click the one in English unless you know how to speak Welsh or read Welsh even. And what that will do is that will actually download the energy performance certificate for that property. The reason we need this is when we open this up, it will actually tell you the size of the property. Now the size of this property is 39 square meters. So this is what I meant, that sometimes this is not exactly accurate, but the true size is 39 square meters, and this is done by the Energy Performance Certificate people when they viewed the property, date of assessment 2017, so pretty recent. So this is the size here, which is 39 square meters. So I take this, I put 39 here. Now in terms of the condition, now sometimes you have pictures and sometimes you don't. So again, I can close these now as we don't need this. I can take the full address and I can put this into Google and try to find the Zoopla listing, which is typically always the first one. And then I scroll down, and again, see this time you do have pictures. Now you don't always have pictures, but this time you do. So the condition, it seems in pretty good condition. Maybe they've had a lick of paint, and okay, so the bathroom's relatively old, the kitchen's relatively old. And I believe this is a ground floor apartment. So the condition isn't the best. It's not brand new. I'd probably give this a 5 out of 10. So the condition's 5 out of 10. The proximity to our property. So if we're looking at this one here, which is the proximity, if I go back here and actually go back into even the main mouse price thing, it will tell you that it's 0.2 kilometers away. Now this is done in kilometers for some reason, I don't know why, but you can put 0.2, but just keep in mind that this is done in kilometers rather than in miles, but that will give us a good approximation. So we know what the proximity is, and I will change this to kilometers just for the time being, and then under notes I'll just write ground floor, just some, just helpful to know. And finally we need to know, well, the link of the property. So I would actually input the Zoopla link in this case, purely because, well, this one has some more information, purely because it does have the pictures. If the Zoopla link didn't have any pictures, I would just put in the mouse price link, but since there are some pictures, and you know, if I want to see the pictures again, I can do quite easily. I'll just input this link here. So I input the Zoopla link, and that is the first one done. Now we look at essentially the next one. Well, okay, so we've done this one. We now look at, is this property here, is this an ex-council property? So we open this up, and again we can simply just scroll down. Again, go in bird's eye view. So this, I believe, if I spin this round slightly, is this property here, which is 1, 2, 3, 4, 5 floors. So again, this is a good comparable because it's very, very close, and the building is, you know, pretty much exactly the same as the one we're looking at. So this is fine. So we'll use this as a comparable, and I'll take all the details just exactly like what I've done before, and I will put them into the sold comparables. So we do that now, and now because we've looked at all the properties in a quarter mile, we now increase this to a half a mile. And again, we do the same exercise. So I believe we've looked at the first 3. We look at some of the other ones now, and we essentially, you know, go through all this list until we find 3 more comparables. Now, we can open this one here, but generally I already know this is not going to be an ex-council property, purely because ex-council properties are normally have some sort of name for the building, and because there's no name, this is flat 48A, this is most likely going to be a house which was converted into flats. But if I open this up, you can do the same exercise, and you can go through this and, you know, determine what this is. So if I click OK, zoom in, and go on aerial view, so you can see this is a house which was converted into flats here. So this is the house, and the reason I know this is because in the address it is 41A and then the street name. Now you typically only get that when you have, you know, house number 48 was probably converted into multiple flats. So we can get rid of this. Again, this will be a similar situation, which is 317 Kennington Road. Again, this will be a house which was converted. We can open this up, but again, this will be exactly the same thing, which is flat 1 to 4, number 11. So the house will be number 11, and someone would have converted. And you can double check these, but most likely that is the case. So I'll simply ignore these ones for the time being. Now, of course, if you were looking at a private property, then you wouldn't ignore these because, well, these would make, you know, these would be the comparables you need in order to determine the value. So now let's open this one here, which is Palm House. Now, because it says Palm House and gives a building name, it might be council now, or it just might be a private building. Because it's called Palm House, I believe it's probably private, but let's have a look. So see, this is really interesting. Now when I've gone onto this, you can see that it's actually just an empty plot of land, and where the pin is, that means this property has probably recently been developed, and most likely it's going to be a new build building, because, well, currently there's nothing here, and most likely a developer has bought this piece of land and built something here. So I can verify this by, again, taking this and, you know, taking this address and putting this into Google and going into even images and just seeing. So, you know, you can see this is a brand new development, and again, that makes sense because there was an empty piece of land here. So again, we can ignore Palm House. Again, this is Palm House again, so we can ignore this one here. Let's open this one. Now, when we open this one, again, similar exercise. We go down here, we go on the bird's eye view, and this is interesting. So I believe, again, this is probably most likely a house converted, I believe. I can Google this and just to get a better view. And if I go on to images here, again, this is not exactly the same type of property. This might be purchased by the council at some stage, you know, potentially, but again, this most likely this is a private property, so we can ignore this one here. Let's move on to this property here. So if I go into images, and okay, maybe we've looked at this one before since it's already come up. Okay, so we have looked at this one before. So this is the one we looked at earlier. So again, we can ignore this. This is the same building as the other one. This is most likely to be you know, private again. Let's open this one up here, number 29. And again, we're essentially going through them one by one. Now this could be interesting. Let's have a look at this. But I would actually not even include this one potentially, because as you can see, this was purchased for £185,000. This is a clear outlier when you look at everything else. Now this might have had a short lease, or maybe a family member sold it to another family member. I don't exactly know what the situation is, but this wouldn't really make a good comparison anyway, purely because, well, it was sold for £185,000, which is not very realistic unless there was some sort of issue. So for that reason, we can get rid of this one, and we essentially just keep moving through these until we find 3 more, because we already found one. We have one here which we found, and we need 3 more. So, and if you can't get 3 more, even if you can get a minimum of 3, that should be fine. So now let's open this one here. I'm hoping this was ex-council, because, well, we've seen quite a few already. Let's open this one, go on bird's eye view, and again, this is ex-council, but it is a lot bigger. So I believe 1, 2, 3, 4, 5, 6, 7 floors. So ex-council, but it's 7 floors, so I don't want to include this one. Then we go on to the next page. So this building is the same as this building, so we can ignore this one. And I'm just going to find some random ones which have maybe like a building name, and I think can make a good comparable. So these all seem to be houses which have been converted, or private buildings, purely because, well, they're so expensive essentially. And now we can go through this one here, and we go into maps and views, go on to bird's eye, and this is council, and this is 1, 2, 3, 4, 5 floors. So again, we can use this one as a comparable. So now we have this property here, which is also a good comparable. It is, it's still within half a mile, but it's really on the edge of the half a mile radius. And we have this property here, which is closer, but this is the one which was 7 floors as opposed to 5 floors. But because we can't find any more which are exactly the same within half a mile and within the last 1 year, these are the ones we'll be taking. So what I'm going to do now is I'm going to take the details of these 3 properties and do exactly the same exercise in order to fill in all of the information here, and put in the size, put in the conditions, and put in all of the links. So I'll quickly take these 3 properties and input all of the details. So what I've done now is I've taken all these 5 comparables, 4 comparables, and I've put them onto the deal analyzer. Now I've input all the details here, and I'll just quickly go through them now. So we have 4 comparables. Now sometimes in your area, based on your area, the property type, you might have a lot more comparables, you might have less comparables. Ideally, we'd want a minimum of 2 or 3 at least, which are good comparables. But you see based on the building you're in or the location you're in how many you can get. But ideally we want 5, but at the minimum we want at least 2. And like I said, sometimes you have more, sometimes you have less. So if we look at these comparables, now if we look at the 4th one here, let's just start from this one here. Now this is a good comparable because it is ex-council, it is within half a mile, but it is actually on the 7th floor, and the buildings we're looking at are low-rise buildings with a maximum of 5 floors. So I don't think this makes the best comparable, so I'm going to change this one to a 0 for the time being. And the last one I'll change to a 0 because obviously we don't have any comparables in this last field. So we'll change this one to a 0. And then we'll look at the top 3. Now, in terms of the top 3, we have this one here, which is on number 3. This is an accurate comparable, but one of the problems is that it is slightly further away, 0.8 kilometers. That is literally on the edge of the half a mile radius. So we can include this, but I personally think the first 2 comparables are possibly the best comparables, purely because they're exactly the same types of building, and they're also very, very close. Now, they're 0.2 and 0.3 kilometers away, and essentially, if we were looking in miles, that's about 0.1 or 0.15 miles away. So that is a pretty good comparable. So if I was to eliminate this one as well and only look at the top 2, I think I get a better picture of, well, what this property should be worth, because, well, these two are exactly the same types of buildings, and these buildings are also very, very close. Now, if we look at the first comparable, it is on for 400,000. Well, sorry, it was sold for 400,000, and the size it sold for was 39, which makes the pound per square foot £10,000. Now, in a very stark contrast, if you look at the one below, pretty much the same price, considerably bigger compared to the other one, but in terms of the condition, it was in much, much worse condition. So this just proves that it is not just about size alone. A lot of people think, well, prices are based on pound per square foot, and that's pretty much everything. But that's not entirely true. It's based on condition and other variables as well. And you can see that exactly from this example here, which is, properties are very, very close to each other. One is in much worse condition, and even though it's bigger in size, they're pretty much sold for exactly the same price. So I think the first two probably make a good comparable. Our property is 58.8 square meters, which is closer to this one in terms of size. But once we've done a refurb, our property is going to be brand new, so the condition is going to be 10 out of 10, not 5 out of 10 or 2 out of 10. So that is one data set we can use. The other thing is, once you've spoken to the agent, you should have asked them for some comparables. And if they've sent any comparables, you can input those comparables in here using the agent's comparables, again, for 2-bedroom properties. And you can then compare, well, okay, well, I've got a property which is this size, and how much should it be worth, and what's the closest comparable. So you have your own sold comparables, and you also have the agent's sold comparables. And essentially what you're doing is you're looking at both of these data sets and working out, well, I think, this is what the price should be based on all the information I have. Now, in this case, because I haven't called the agent, I don't have any information in this in this box here, but I'm going to be using this information here, essentially in the first two rows. So in both the cases, the property prices are about £400,000. One is small, one is much, much bigger. Our prices, our size is somewhere in the middle of these two, but our condition is going to be much, much better. Our condition is going to be 10 out of 10, as opposed to, something which is 2 out of 10 or 5 out of 10. So I think because it's going to be brand new, and because the sizes are sort of in this range here, and this was sold for about $403.95, I think we can probably charge around the 430,000 mark. And I've come to this conclusion because even if you look at this property here, it has a bit of a ceiling at 440, because it doesn't matter how good the condition is. It doesn't matter if you put gold in the property. At the end of the day, it's still an ex-council 2-bedroom property in that particular area. So because if I look at this immediate area, this one sold for 440. It was on the 7th floor. Ours is pretty much the same size. Actually, I'm going to increase this slightly to 440 because of the fact that, well, someone did pay 440 for a 2-bedroom property in this area. Even though I think these two comparables are closer to ours, these two are also in much, much worse condition. And because ours is going to be practically brand new, and we're going to be spending a lot of money on a refurb, then, we can argue that our property should be worth around this mark. Now, what you can't do is say, well, because ours is brand new, it should be worth 500 or 600. Because like I said, there is a bit of a ceiling, and this is why it's always helpful to have as many comparables as possible, because you can look at, well, okay, this isn't exactly the same as mine. This is slightly worse in my opinion because it's on the 7th floor, but it does say that, well, someone did pay £440,000 for a 2-bedroom ex-council in that area, so it wouldn't be unreasonable to think that, we can charge something similar. And people did pay $403.95, but in much, much worse condition. So if we had it brand new, then could we charge a bit of a premium? So you input your GDV here, which basically means, the development value, the gross development value, once it is a 2-bedroom, and you input the rent here. So those are the two main things we essentially need to work out when it comes to the valuation sheet. Now we move on to the next sheet, which is the deal analyzer sheet. And just so you can see the key here, the key means, the blue means that we have to input this figure, and the yellow means that these numbers have been input based on the valuation sheet, which is this sheet here. So since we put in 1650 and 440, 1650 and 440 are already plugged in, as well as the asking price 330 since we input this here. So if you want to change these three numbers, you will have to change them in the valuation sheet in their relevant boxes, and that will automatically adjust here for you as well. So the next thing we need to know, or the first thing we need to know, is the purchase price. Now, for the time being, we'll leave the purchase price, not 3.3 million, we'll leave the purchase price the same as the asking price, because we'll see, well, at the asking price, what does the deal look like, and how much of a discount will we need in order to make this a good deal. In terms of the total refurbishment, if you have some builders and you've done the builders exercise, you will have some sort of rough estimate from your builders in terms of how much how much a 1-bedroom into a 2-bedroom will cost, or how much will a 2-bedroom house converted into a 3-bedroom house will cost. So generally, let's put in about £35,000 in terms of the refurb, or it could be slightly more, it could be slightly less based on where you are and based on the builders you found. But let's put in roughly around this sort of figure here. The first big box we get onto after the initial details is essentially the details about the bridging loan. So again, the first thing it asks is the lender and the product. So you put in the lender's name and the product's name, and then you put in the loan to value, the gross loan to value of the bridge. Now, typically you can get a 75% loan to value bridge, which is the gross loan. And again, all of this is covered more in the finance section. So if you want to review the finance section to get a better understanding of this, then watch that and then maybe come back onto this section. So we input the loan to value, which is the gross loan to value, at 75%. And this is already calculated for you. So this means that if we purchase the property for example, this price here for £330,000, the bridging company will give you 75% gross loan of that. Now, typically there will be some sort of arrangement fee. Typically that is about 1%. The interest rate is normally around the 0.8%. It could be lower at 0.75% per month, around that sort of rate. Typically we're on the bridge for 12 months, and typically you will have 1% exit fees. Now, when you're doing the desktop analysis, you can leave in these estimates because these are very, very, very close to accurate. But when we come onto the full analysis will essentially just change these figures, or you can just delete these figures and input the exact ones once you've had the quotes back from the bridging company, from the mortgage company, and even the builder. So, but we'll leave in the estimates for the time being. Then you have a broker fee. Now, sometimes this can be free. The legal fees are about £1,500. The valuation fees are £750. And once you have calculated all the interest and all the fees, that will tell you how much of a net loan will you get. So here we had the loan to value, which was gross, and here we have the net. What that means, and again, this is covered in the finance section if you want to review this, but essentially what that means is this number here is the amount of money the bank will give you cash in hand. They won't actually give you 75%. They will give you 75%, but they'll hold on to all of the fees and give you the amount left after taking into consideration all of the fees. Like I said, this is covered in the finance section, so review the finance section if you want a deeper understanding of this. So the total cost for the bridging is £27,430. We now move on to the acquisition section. So in terms of the acquisition, we have the deposit, which is 34%. The reason this is 34% is because, well, the bridging company technically is only giving us 66% because of all the fees, and we have to come up with the remaining 34. So we can put in 34, that is already calculated for you at 34%. Then we have stamp duty, and again, stamp duty is already calculated for you, 16,400 in this case. We have solicitor fees of £1,500. Sourcing fee, because I don't use a sourcer, I've left this at 0. Searches about £350. Building control about £600. If you're using Smart Draw to create the drawings, the floor plans, about £10. And that will tell you the total acquisition cost, which is £130,290. So that means it will cost £130,000 in order to acquire this property, because of the fact that you have to pay a deposit, you have to pay stamp duty, and all those things. So £130,000 is how much you need in order to purchase this property and to essentially acquire this property. Then we move on to the project cost. So we have the refurb cost of £35,000. The contingency you can build in. I normally leave this to 0 because I find that the builder's estimate is normally very, very accurate, especially since it's a very small refurb. Lease extension, we aren't doing a lease extension in this case, and in most cases, we don't tend to do one, so we can leave this at 0. The utility bills and council tax we have put in. These are monthly costs, and since it's since we're saying this is a 12-month project, i.e. it's going to take us 12 months to do this, we have equated for 12 months of council tax and 12 months of utility bills. We have the interior designer cost. If you're using an interior designer, you input the fees. And then we have some cost for the furniture, which is typically about £3,000. So the total refurb cost, or the total project cost, comes to £42,100. Then we move on to the section with a mortgage. So again, with a mortgage, the first thing we have is a lender and the product. This time you have 3 options. You have the variable mortgages, a 2-year fix, or a 5-year fix. Now, typically we go for a 5-year fix, so you can leave this like it is currently. The loan to value you end up receiving is 75%, and unlike the bridging loan, this time you do actually get 75%. The mortgage rate is typically about 3.6% for the 5-year fix, but again, it's one of those things which changes every month, and every few months this will be different based on what's happening in the economy. The rental coverage requirements, so this is your mortgage stress test requirements, and this is already calculated for you based on your product. So for example, if you have a 2-year product, as you can see, these numbers change because the stress test requirement is different for a 2-year product compared to a 5-year product. And what this is really affecting is this figure down here. So it says that the rent must be greater than this particular number, because this is the stress test calculation. So when you have the 5-year fix, the rent has to be greater than £1,237. But if you have a 2-year or even a variable, you can see this is jumped up by a couple £100 because the stress test requirements are much, much higher and they're much, much tougher. Now, in either case, this is actually okay because, as you can see, our rent is 1650. So whether it is a variable or whether it is, essentially a 5-year fix, in either case, it does pass. But as you go to more and more expensive properties, you typically need a 5-year fix because your rental requirements are much, much lower, since your stress test is much, much more lower compared to the variable and the 2-year fix. But again, this is covered in a lot more depth in the finance section, but I'm just giving you an overview of what these numbers are and how they're calculated. Then you have the arrangement fee, which is typically 2%, but which is 6,600 in this case. But this is not money you have to pay upfront. This is sort of built into this loan of 75%. So even though you have this, you don't typically have to pay this money, cash in hand. This is simply built in part of your loan. Then you have the valuation fee, which typically can be free. You have the broker fee, which might be around £800. And you also sometimes have a legal fee. This can be free, or it can be, £1,000, £1,500. So typically, you only have to pay around £800 plus any valuation fees, plus any legal fees out of your own pocket. The rest is sort of built into the loan. When I say the rest, I mean this is really the only cost in this case. So this is built as part of the loan. We then have the marketing cost. So the marketing cost is, if you have any professional pictures done, that might cost you about £70. If you have a letting agent, they might charge you, some fees in terms of, letting the property out, and they might have their own fees, whatever their fee structures are, in terms of, finding you a tenant. So because we do this ourselves and we self-manage, we normally leave this to 0. Then we have the cash flow component. So I'll just make this slightly bigger. We have the rent, which is £1,650. In terms of management, we self-manage the property, so we leave this at 0. If you're hiring a letting agent, they will typically charge you about 10%. So you can put in 10% if you have a letting agent, or 5% if you get a really good deal, or 0% based on the fact that if you're self-managing yourself. You then have the mortgage payments. You then have the maintenance buffer. So we leave in a 5% maintenance buffer in case there's any, sort of things we have to repair and so on and so on. And I recommend you leave this one at 5. You have the gas safety checks. Again, this doesn't really cost much money at all. You might have a service charge if this is for flats only, and the service charge might be £100 a month. It might be £200 a month. It just depends on what type of building you have. Now, this particular case is a council building, and that's typically around £100 every single month. The ground rent is normally about £10 a year, so I'll just put this as £1. It's very, very low on ex-councils. On private buildings, it might be slightly more. Now, if you have houses, then you don't have either of these costs, but for flats, it's roughly, for ex-council, it's about £100 and about £1 a month for the ground rent. It might be more for private. You have building and content insurance, again, very, very cheap, about £10 a month. And for voids essentially means, well, how long is the property empty every single year? So maybe you have a tenant and the tenant moves in and then they move out and now you're looking for a new tenant. There might be about half a month which goes by the time they leave and you sort of fix some maintenance issues and market your property and get a new tenant in there. So that is essentially what the void period means, i.e. how long is the property empty for, because you're not going to be getting rent for that period. So you can select no voids, or you can select half a month or 1 month. I'll typically leave this to about half a month every single year because that seems realistic. You typically won't get more than one tenant moving out every year. So if you have one turnover or one change, you can normally do that within 15 days, within half a month. So we'll leave this one at half a month. So that means your cash flow is 397.75 every single month from this property. We then look at the key metrics. So in this case, the total cost is £419,000. That is how much money, that is the total cost of the project, including, the purchase price, all those sort of things. The total equity invested, what this means is, well, how much of your money have you put into this deal? So how this is calculated is, if you look at your acquisition cost, it is £130,000. This is how much money you need. But we typically pay for the refurb as well. So if you add this and this, you get to 172. Now, you don't necessarily have to pay for this. You can get a bridging loan for the refurb as well. So therefore, technically, the only money you need is 130, not 130 plus 42. So in this case, it says, 174 because it assumes we pay for the refurb as well. So I'll just put in brackets, refurb, included. So if you don't pay for the refurb yourself and get the refurb as part of the bridging loan, then this is considerably less. This will only be, this figure here, which is £130,000 plus 800 plus 70, but you'll save this £42,000 here. So then you have the profit, how much profit you're making on this deal. So the profit currently seems pretty low at about £20,000 based on the purchase price. You then have the profit on cost. What that means is, well, if you made £20,000 but you had to spend £420,000, then you've only made a 5% profit because 20,000 is, roughly 5% or £420,000. Next, you have cash surplus, which is essentially how much money you get back out of the deal. Now it says ignore if this is in brackets, because if this is in cash surplus, what that means is, well, let's say you buy a property, you add a ton of value, and when you go for the remortgage, because you've added so much value, hypothetically, that the bank actually gives you some extra money on top, purely because, well, you bought it so cheap and you added so much value. Now, that is very, very hard to do, and that doesn't really always happen. So that is essentially what cash surplus means. The reason it says ignore this if this is in brackets is because if it's in brackets, that basically means it's a negative, i.e. this field is the same as the next one, which is money left in. As you can see, the numbers are exactly the same. If this is in brackets, you haven't actually got the extra money from the bank. It just means that is how much of your money is now left in the deal. So once you bought this property, added your value, refinanced the property, you have £89,000 left in the deal. And so these two numbers, the cash surplus and money left in this case are exactly the same, but because this is in brackets, that means there's money left in. If this was positive, that, let's just say hypothetically, if this said £20,000, the bank will give you £20,000 extra once you refinance the money. So in this case, your money left in would be zero. But because there is money left in, you can simply ignore this since it's in brackets and just look at the next one. That means £89,000 of yours is left in the deal. We then look at the gross yield. This is essentially your annual rent divided by the value of the property. The net monthly cash flow we've calculated here, which is the monthly cash flow every single month. And then we have the ROCE. What this means is that, if you're making £397 every single month, that means over the course of a year, you would have made, 12 times, this amount here. So you would have made close to £5,000. So if you make £5,000 every year, but you had to invest £90,000 in order to make £5,000, that is a return of 5.3% every single year. So that is your ROCE. That if I invest £89,000, how much am I making, every single year? You're making a 5.3% return. And again, how this is calculated is simply by looking at how much money you make and dividing it by how much of your money that is left. So I make 4,773 every single year by investing 89,000, which means I'm making a 5.3% return. And then finally, we have the ROCE, or what I say, the ROI, pretty much the same thing, multiple, which means that if I had bought a property worth £440,000, the reason I say 440,000 is because this is, what we're saying the property is currently worth. If I had bought it £440,000, fully refurbed, all done, I don't have to touch it, I don't have to do anything, all I have to do is rent it back out. And if I rent it back out, I can rent it for £1,650 every single month. I'm going to make a certain return, right? I'm going to make a return on my investment. Now, when I look at BRR deals, especially if I'm holding the deals, I want to be making at least 2.5 times the return of what I would be making if I'd simply just bought it outright. Now, what that means is that, because we're doing this clever strategy of taking a property, adding value, pulling our money back out, I want to be rewarded for that. And to me, a good deal is that I want to be making 2.5 times the return compared to the person, or, the person down the road who simply just goes to the, to the estate agent and just buys a property off the shelf ready to go. I want to do 2.5 times better than that person. So currently, I'm only doing 1.6 times better than that person, but I want to be doing 2.5 times better because that is my deal criteria. That I want to be making a much, much higher return compared to people who just buy properties normally. So, think about the average person who... So maybe you've done this in the past, which is you found a property, you like the property, and you've simply, saved up a lot of money from your job and you've just bought that property and rented out. But because, and you would have got, a certain return, maybe a 3% return, a 4% return, whatever that return is, you would have made a return on investment. Now, whatever that return is, by doing this strategy, I want to be making 2.5 times that return, so I don't have to keep buying more and more properties. The ones I'm buying, I'm making a lot of money, I'm pulling out a lot of my money and then, investing that money very, very carefully again and again. So every time I invest, I'm making 2.5 times a greater return than just simply buying the property normally. So that is what this tells me here, which is currently it's only 1.6. I want to be making 2.5 if I'm holding. And that is exactly what you can, see here under deal criteria, which is that the criteria for flip is I want to be making a 20% margin on profit on cost. So this figure here, profit on cost, has to be 20% for it to be a good deal. And for holds, I want to be making 2.5 times the ROCE compared to what someone makes normally. So if someone makes, let's say a 4% return normally, so I'll just give you an example. Let's say someone makes a 4% return on ROCE normally. I want to multiply that by 2.5 times, and I want to be making at least 10%, on the same property that someone's only getting 4%. So that to me is a good whole deal. And if I look at the numbers currently, I'm only making a 5% profit on cost, 4.9%. If I just add in one more decimal, you can see that it's 4.9, same as this. And my current, when it comes to hold, is 1.6, which is the same as this. So therefore, currently, it's not looking like a very good deal, and the deal criteria is actually failed because, well, it doesn't pass any of those. And now, depending on the strategy, you would want to work out, well, which one do I need to look at? I don't look at both. I only look at the strategy I'm currently doing. So if I was buying to sell, I would only look at this one. And if I'm buying to hold, which is what I normally do, then I only look at this one and I ignore the one above. So what you then need to do is work out, well, okay, currently I'm not meeting the criteria, but at what purchase price do I meet the criteria? And the way you can do that is very, very simply by clicking this button which says check. And if I press check, what happens is these numbers have now changed. So now these numbers have changed and adjusted to what we need to pay in order to meet these criteria. So for example, let's just say for argument's sake that we're looking at this property to buy and hold. So it is saying that if we can buy this property for £301,417, then this criteria will be met. The hold criteria will be met and this will be a good deal. So if you want to verify this, you simply take this number, which is 301,417. I go up and I say, well, okay, for this property, I'm not going to pay £330,000, which is the asking price. I'm going to pay, let me just check again because I've forgotten. I'm going to pay 301,417. So £301,417. This is how much I'm going to pay for this property. And if I go down now, as you can see, the return multiple is now actually 2.5 times what someone would get if they had just simply bought a £440,000 property outright and didn't do any work, didn't add any value, didn't get any discount. So we're now getting a 2.5 times multiple. So that is the case here. This is how those are worked out by simply pressing this one button. Now, one thing you will notice is that even though the hold criteria is met, the flip criteria is not met. The reason is because generally you need a much bigger margin when it comes to flip deals, and that is normally what the case is compared to the hold deals. Flip deals are normally harder purely because you have to have a big margin in there in order to buy and add value and sell very quickly, whereas hold has its other benefits that the margin doesn't have to be as big because you will make cash flow over time, you will get appreciation over time, so you will benefit from other ways. So it's very important to stick to the criteria you're looking at, and generally, like I said, you can typically pay more money for the hold deals than you can for the flip deals. So as you can see, for the hold, even if we get it for 301, the criteria meets, but if we want to flip it, we have to get it for around £17,000, even lower than what is currently than 301,000 in this case. So we look at the holds and we say that, well, 301,000 is how much we need to buy it for. And then if we look at this section here, it says for viewing, well, okay, we're still on the desktop analysis. Should we view this property or should we not view this property? And if we look through both, then for flip and hold, the asking price is, well, exactly the same, £330,000. But in order to get this as a flip deal, we have to get it for £284,000. As a hold deal, £301,000. That means in order for this to work as a flip deal, we need a 13.7% discount, and as a hold deal, we need a 8.66% discount. Now, this meets the criteria because the criteria is that only view properties where you need a maximum of a 20% discount. Because, for example, let's say the asking price is £330,000 and you have to get it for £100,000 in order for that to be a good deal. Now, it's not very realistic that you're going to end up getting this property for £100,000 because that is, a massive discount. And I think you will just end up wasting a lot of your time going to viewings where you don't necessarily need to be going because, well, you're never going to get the property for a 70% discount or 80% discount. So I only view properties where I need a maximum of a 20% discount. And as you can see, for hold deals, you generally need a lower discount than you do for flip deals. And this also helps because it makes that because you need a lower discount for it to be a good deal, that means you're more likely to get those deals. Whereas generally, the bigger the discount you need, you end up losing a lot more deals. So even though you're holding, there's no reason you can't, have this as a discount and offer 284 as your final price. There's no reason you can't do that, but it just means that because you're offering a bigger discount, because you want a bigger discount, it just means that you'll be less likely to get that particular deal. Now, if you view it enough and you offer enough, I'm sure one will come through, but generally, the lower the discount you need and you still have a good deal, the more likely you are to get it. And of course, that's pretty common knowledge, whatever you're selling, that if someone asks for a low discount, it's more likely they will get those deals. So I would personally advise you to, stay with the numbers and the discounts of the strategy you're looking at, but that's not to say that you can't just offer, even though you're holding and you want it for 300, you could say, well, I'm not going to pay any more than 284. That's completely fine, and you can do that. It just means that you'll have to view more, offer more in order to finally get one through. But again, there's nothing wrong with that. But if you were using the criteria and abiding by the criteria, this is what you need to do. This is essentially what you need to purchase it for. Now, in this stage, we'll look at, well, okay, if we want to purchase the property at £301,000, well, what should we offer? And now, what I say is typically we want to offer 10% lower than the purchasing price. The reason that is if we're holding, we want it for 301, but if I offer 301 as the first offer, then it is going to, if it gets rejected, I then have to increase this offer. But if I start from 10% lower, which is at 271, it gives me a bit of a margin to work my way up to 301 and slowly keep increasing my offers. Whereas if I start from this right at the start, I don't really have anywhere to go. So that is another thing to note, by the way, which is that you might say, well, I want to pay maximum of 284, but you don't necessarily start from there. You would have to start from 256. So again, this is why I say, stick to the numbers of that particular strategy, because you're going to start from somewhere lower anyway. And if they accept 271 as your first offer, then even better. But we then look at the offer and we have to start from 271. But in terms of negotiation, and I'm just going to use the hold example, we know we have to start from 271, which is the starting offer, and we know we want to end at 301. We don't want to pay any more than 301 because that helps meet our criteria, and that is the final offer. So we have the first offer, the starting offer, and we have the final offer. How do you come up with the offers in the middle? Now, what a lot of people do is they keep increasing their offers in the same increments. So what that means is, now let's say you offer 271 and they say no. You then say, okay, well, I'll offer 281. Let me just put this into pounds. So you say, I'll offer 281,000. And they say no. Then you say, okay, I'll offer 291,000, and they say no. Then you say, okay, well, they know the next one is going to be 301,000, because all you're doing is you're increasing 10,000 every single time. And what that subconsciously says is that this person is going to keep increasing offers by 10,000 every single time. And that's not something you want to do. What you want to do is you want to increase your offers by smaller and smaller amounts every single time. So if I have the starting offer, which is £271,000, the next one I'll show you here, if I do the difference between the two, is, okay, you've increased the offer by £15,000. But next time, I don't want to increase by 15,000. I want to increase by less than 15,000. So if I look at the difference between these two, the next offer is 9,000 more. And then the next offer, the final offer, if I do the difference, is only 6,000 more. But what you're doing is you're increasing your offer, but every time you increase, it's by lower and lower amounts, because that subconsciously says that, well, this person has a final price he's working towards, and you're sort of converging to one point. But if you just increase by 10,000 every single time, the person thinks, well, you'll just increase by another 10,000 and another 10,000, and it sort of never ends. So these offers are already calculated for you. There's nothing you have to do, and like I said, the only fields you have to input are these blue fields. Everything else is already done for you, and these are designed in a way so your offer is, less every single time, and that is essentially what you want to be doing. You want to be offering less every single time so they know that you're arriving to a point. So essentially, what we've done in this deal analyzer is we've looked at the rent comparables to find out, well, what the rental should be. We've then looked at the GDV to work out, well, what should the GDV be? And again, if we had the agent's comparables, the agent would have given you a price as well, and it might be 440, it might be slightly lower, it might be slightly more, and you use all that information to come up, create a accurate picture of what the price should be as a 2-bedroom property. We've then input all the figures in here, only the ones in blue. Most of these you can leave because they're very, very good estimates, and when we're doing the desktop analysis, all we need is pretty much the estimates. We've then input everything. We've looked at the key metrics. We've looked at the deal criteria. We've then, by pressing the check button, we worked out, well, what should the prices be for the relevant criteria to meet. That has told us how much of a discount we need. It told us how much to offer, and then it's finally told us, well, what is the starting offer, how do we increase the offers, and what is the final offer. And if you can purchase this property for an 8.66% discount, then that means you have a 2.5 times multiple of return compared to someone who has just bought this property the traditional way, which to me is a really, really good deal. So that is essentially how you do deal analysis and how you work out, well, is this a good deal or a bad deal? And more importantly, what price you have to pay in order to make this a good deal and make this a deal worthwhile doing, whether it's a whole deal or whether this is a flip deal.